Hi, this is Joseph. It's Sunday, it's December 6th, and the market is officially open. Right now what we're looking at is the euro dollar. This is the 60-minute time frame. So non-farm payrolls really didn't produce too much activity here. It was relatively muted. I did get a couple of trades on the pound dollar, and right now, again, this is the 1 hour time frame, so we've got a couple of different levels that I'm going to be paying attention to here. And I really don't expect to get a trade until probably during the London, I'm sorry, yeah, the London or the New York session. Sorry about that. Um, but in the meantime, I'm going to continue to watch key levels of support and resistance. I also have some possible continuation breakout trades that could eventually set up, one being here on the euro dollar. Now, the continuation breakout trades, it really depends on what happens when the signal is generated. So very often what I'm doing with the continuation breakout trade is I'm looking for levels of support and resistance, and then I'm waiting for some kind of a breakout, and I wait until the candle closes. Now, that doesn't mean it's the only time I'm going to get a trade. It just means for that particular setup or that technique, I have to wait for a specific candle to close outside of a very defined, clearly defined consolidation range. And then I take a look at the indicators. You've probably seen some of those videos on my website or in the YouTube channel or in the membership site, the continuation breakout trade. I would expect at some point we're going to get one on this pair. But even if we do get a continuation breakout trade and a candle closes outside of this range, we still have to confirm that it's likely to continue, because sometimes you can see those head fakes, and that's one of the things that point and figure really helps me avoid in most situations. This is actually the point and figure for the euro dollar, and you can clearly see that there's very solidified levels of support and resistance using a chart like this, and I really like using the point and figure for day trades. Trying to drop that in there right there. Sorry about that. Doesn't matter if it's perfect. It's still going to give me a pretty clear indication as to where that support low. So you'll notice that there isn't as much activity on this chart as there was on the bar chart. And that's due, for those of you who aren't too familiar with it, with point and figure, that's due to the fact that the way I constructed this chart, you're not going to see some kind of a change as far as the X's in this column here indicating a move to the upside, or the zeros that are moving to the downside. So you've got a bullish and bearish moves. There isn't going to be a significant change or an additional X or zero added to this chart until there's enough volatility. There's enough of a specific change, again, based on how I constructed the chart, that it would warrant another X or a zero. So it's just a matter of waiting for it. Very often you'll look at ranges like this and you compare it to maybe a candlestick chart or a bar chart, and there's a lot more bars or candles, but it'll be a very limited amount of data here. I'm just giving you an example of what I'm looking at and what I'm waiting for. And this could go on for perhaps a couple of days. This could be perhaps 2 days, 3 days worth of data. And again, it's not based on time. So this this will only change if there's a significant change based on the way I constructed the chart. It is very, very different than looking at, let's say, a candlestick chart or bar chart, which is based on the amount of time that passes, and that's not the same situation with the point and figure. So this is the pound dollar, and you can see the difference here between the pound dollar and the euro dollar. There was a lot more activity on Friday, and that's why I had 2 trades on the pound dollar as opposed to trying to trade the euro dollar. Very often I'll get a trade on one particular currency pair, and I can tell, not in every situation, but usually I can tell that it's a trade that I should pass on because it's not likely to reach those take profit levels. So if you notice that I might be avoiding certain currency pairs, first of all, I'm not going to scalp it for 2 or 3 pips. There's no point in doing that. I mean, the only time I would consider that or end up with 2 or 3 pips is if the trade's just not working out for whatever reason, and I'll close down the trade. I can kind of identify that it's not going to work. But very often if I get a signal on one particular currency pair, if it doesn't seem like it's going to reach the expected take profit level, then I'm probably going to avoid it, especially if I can see a real lack of participation. If you've watched some of my other videos, you know that I also trade futures. So I'm watching, let's say, for example, if I was trading the pound dollar, I would be watching pound futures. And if I just don't see that volume within that futures chart, I'm thinking that in most cases, especially if it's just going to go sideways, just stay out of the way. It's just not going to produce as much opportunity, and it's really a matter of where should I allocate capital. That's the question. So if you can see that one particular currency pair is likely to move and cover a specific distance hitting the expected take profit levels versus another currency pair that just looks slow moving, there's not a lot of participation, there just isn't a whole lot going on with that particular pair, then I would rather put my money into one particular currency pair that's likely to generate bigger results. And with all the activity in the news and the tweets and the comments and things like that with this pair, it didn't surprise me to see it kind of moving to the downside and reversing and then pulling back pretty sharp. These moves were pretty sharp. So with non-farm payrolls, for those of you who are considering using my trade copier service, with non-farm payrolls, I don't, or any other news event, I don't jump in the split second that the news is released. That would be trading the news itself. There's many different strategies to trade the news. One would be just jumping in. It's exciting. I remember doing it the first few years of my trading career, but I don't trade that way anymore. You can lose a lot of money in a really fast or short period of time. And the other issue is that I need to be constantly aware of what my subscribers are likely to experience. So what I've noticed and still continues with several other brokers, I don't know how many of them are out there still doing it, but they still do it. Not all of them, but they'll prevent their clients from trading 5 minutes before economic data and 5 minutes after. And they do that to protect their clients, because if they jump in and they don't know what's going on, they can lose and blow up their accounts. They can lose all their money. How many times have you seen or tried to trade the news, and you're there, you're listening to the news, and you're trying to get into a trade right away, and sometimes you don't get a fill. Sometimes it's not the fill that you want, and that your broker will slip you like wildly, sometimes 17, 18 pips. And the same thing can happen when you try to close out the trade. And then the other issue, again, is just that very often when you do the best you possibly could to try to determine what the expected numbers are going to be on a particular news event, even if those numbers match up to what you expect, the market still doesn't always move the way you think it's going to move. Price doesn't always work that way. So it doesn't move in the way that you would expect when you're trying to trade the news. And very often that could be due to, let's say, let's say the spike itself hit a specific level of resistance, and then it was a perfect opportunity to reverse price and initiate some kind of a markdown phase. Something like that could take place with economic news events. So the way that I trade it is just simply waiting for, let's say, a 30-minute candle to close or that 1-hour candle to close. In this instance, let's say if we go back over here to the euro dollar, so this will give you an idea of what I was looking at on Friday. With the euro dollar, with the economic data, let me see if I can find that. I'm in California, so that's 5 o'clock, 6 o'clock. I'm 3 hours behind the at New York. So if the economic data is going to come out at 8:30, let's say 8:30, that would be the 5:30 candle. This is a 1-hour bar, so that's the reaction here. And again, if it just starts moving sideways and nothing happens and it doesn't break out of that 1-hour range from when the news was released itself, well, that's kind of an indicator in itself. It's just not moving anywhere. There isn't enough participation to really drive price out of that range. And then eventually it just kind of drops right down there and just sits there. That's not really a trade that I would consider, because you don't know how long it's going to take. I don't like holding positions over the weekend. And if I'm going to get stuck in a trade like this and it's not going to hit my expected take profit target, then the temptation is much greater that I would hold onto the trade, and then I would have to continue to hold onto the trade through the weekend. Well, in this case, it really wasn't a big deal. But how many times have we seen, when the market opens for trading, you get this really big gap? And there was such a great deal of discussion between the euro and the pound the end of last week, and the possibility of some kind of deal or something happening, some kind of a comment statement that could have created a pretty big gap on this one. Not likely, but it could have. I mean, we've seen it happen. It does happen. It will happen again. And certain trading environments where you can identify that possibility, it's just a really good idea to stay out of the way. So again, I didn't execute really any trades here. I could see some setups kind of developing, but again, I just didn't think it was going to go that far, so I stayed away from it. The dollar yen, I'm going to be keeping an eye on the dollar yen because it continues to make a move since last week off of the lows. So again, I'm going to be identifying some critical levels of support and resistance to see if they come into play. But at this point, it is a bit choppy. I want to be mindful of the retracements after I get a signal, because the retracements, again, if you're using a wrong size stop loss, you can get stopped out really quick, and then it'll go back to the target anyway. So I want to make sure that I'm going to be finding the right moment where I see more momentum and participation. This is my point and figure chart for the dollar yen. And, you know, when I see it choppy like this in certain ranges, I tend to stay out of the way because I know the retracements are going to be pretty deep and pretty substantial. But eventually, even switching to a larger time frame, I'm going to get a better idea and a better picture of where everything's headed overall. So I'm going to go ahead and stop here. I hope you all had a good weekend, and I'm looking forward to some really solid trades this week. As we approach the holidays, I'm going to continue to trade through the holidays. Obviously, I'm going to take you know, the first of the year and Christmas Day off, probably Christmas Eve, just because, you know, it could move in a really tight trading range. There's just no point in sitting there watching it if you know, if most of the currencies are moving in like a 20-25 pip range. I remember a few years back that happened, and I sat there and watched it through you know, the day before, 2 days before Christmas, and then the day before Christmas, and it can get pretty tedious and monotonous as far as watching price waiting for something to happen when it doesn't, and you can tell that it's just based on holiday. But I will be watching the charts. I will continue to watch right up until the markets close for holidays to see if there's an opportunity. Again, it doesn't mean I'm going to be chasing price up and down, and I can't guarantee how many trades I'm going to have during the session or the season, the holiday season, but I will be trading.